All right. Thank you all for sticking around following Senator Markey's remarks. We are excited for our next breakout session. So welcome to Building and Financing Ventures for a Resilient Future. This session brings together founders and investors to share real-world lessons from launching and supporting ventures built to thrive in a changing world. With insights spanning sectors and geographies, our panel will explore what it takes to scale climate-resilient solutions and how innovation can drive impact where it's needed most. I'm pleased to introduce our moderator, Victoria Pisini. Victoria is the founder of Climate Salon, a Massachusetts-based nonprofit bringing the community together to discuss solutions to climate challenges. She is also a lecturer at MIT Sloan. Victoria brings deep experience in business strategy and international relations and has worked with organizations including A.T. Kearney, Inertian, and Light Matter. She holds an MBA from MIT Sloan and a BA in International Relations from the University of Pennsylvania. Please join me in welcoming Victoria and our panelists.
All right. Thank you very much, Jen. It's great to be here with everyone. Thanks for joining us. I know Senator Markey, got me really excited. I don't know about you all, and made me even more energized for the panel that we are about to have today. Sit wherever you all want. That looks good. So thank you. We are here to talk about building and financing ventures for a resilient future. Again, my name is Victoria Pisini. You heard a little bit about me, but Climate Salon, maybe a slight background about Climate Salon and why I founded it. It started really in my living room with bringing together people to talk about solutions to climate. And what we realized is that there are a lot of other people who want to be included in this conversation and a lot of other voices that we need to get a lot of this work done. I work now with startups. My background was in corporate world, and I realized that to get startups scaled up on this journey to be the real change makers that we need them to be with big corporations, what at first they need is a lot of support to get those pilots going. That requires a lot of ecosystem actors, whether it's the community, whether it's other nonprofits, whether it's public sector, and support from people like Senator Markey, if you can hear. We need all of those voices in the room moving together to make change. So, and then what I also think a lot about then is how do we get these organizations funded? So with that being said, I know today we've heard a lot about adaptation and resilience, and that covers a lot of ground. So it goes from everywhere from better utilizing resources to adapt to a changing climate, from our forests or our oceans, to maybe even how we can design our supply chains or urban environments with integrated planning or sustainability in mind. We heard about insurance. We heard about the the IRA or the Green New Deal or the biggest, best climate. What was it? The biggest, best climate bill ever. All of these actions are needed, and we really need them now to bring back one of the stats we heard earlier today too. We know that every dollar in adaptation today could mean $10 in recovery later. So it's maybe we don't know if that number is exactly accurate, but it's the magnitude that I think is really important of the change that we can make today. But these challenges, they can be really, really hard to break down. So much of the work that needs to be done is systems change. And that requires a lot of stakeholders to be involved. And a lot of the pre-work that needs to get done to align those stakeholder interests is time-consuming and hard to do. And so if you're a startup in this space, this can make selling your solution to a traditional investor kind of complicated. And so, what we hear is that there's a lot being done. We talk a lot about diversifying the capital stack, and we talk about getting smart on grants and debt. But I don't know if you're a startup out there or somebody else in this space, it's inevitable that you are going to need venture capital at some point. You can't access certain forms of capital until you've scaled, and venture is often the sort of missing piece at the beginning. And so, in theory, venture, we really want it to be a little bit more fit for purpose. And so far, it hasn't always been. And so I'm really now, I think with a little bit of context, hopefully that's helpful. I think what I want to do is hand it over to our amazing panelists here who are sort of changing the way that we view venture and the role that it plays in systems change and working with really innovative startups. So that being said, I want to introduce, let's see, Lauren, Abda, Sharo Atmeh, and Pereg, but I will let them do their own introductions. So thank you. Let's maybe a round of applause in joining me and thanking them for being here. So yeah, we'll start with you, Lauren.
Thank you. Well, it's a pleasure to be here. This is my first time at the MIT Sustainability Summit, and congratulations to the team. These things are not easy to put together, so thank you for such an awesome day. As Victoria said, my name is Lauren Abda. I started Branch Venture Group. I co-founded it with my colleague Marcia Hooper. She and I, prior to forming Branch Venture Group, worked out of the Harvard Common Press, and we're looking at the time back in 2013 at food tech companies for investment, which to us was digital content and media, e-commerce marketplace companies, different types of supply chain technology, high growth, high potential, heavy IP type businesses that were really a fit in food for early stage capital venture or even earlier. And so she and I came back together to form Branch Venture Group, mainly because we had met so many entrepreneurs that were really struggling to find funding for their businesses. And these are people, locally, nationally, that were just launching businesses out of their MBA programs, out of their postdoc programs, really saw a need for a product or technology or a service to bring to market to improve the sustainability of our food system, increase, human health, contribute to better environmental outcomes. But we're struggling to find funding because so much of the funding required for those businesses was far and beyond the need for early stage capital. And so we formed a network of accredited angel investors to be part of a group and work together to identify, diligence, and co-invest in opportunities. So companies coming to us are typically raising anywhere from $500,000 to $3 million. They're at their pre-seed or seed stage financing round, and they're looking for angels that have expertise in this sector of food and ag to be able to continue to work with them and provide not only funding but also mentorship and advising. So it's a little bit about what we do, and excited to talk more about it.
Yeah, awesome. So really community first, community led, and realized what the community needed and built this angel group out of it.
Exactly.
Very cool. Okay. Pass it over to you, Sharo.
That's a tough act to follow. Thanks everyone for staying here so late on a Friday afternoon. It's an honor to take up a little bit of your time, and we are very grateful for it. My name is Sharo Atmeh. I am one of the co-founders of Montauk Climate. Montauk Climate is a venture studio and venture fund entirely focused on what we're calling the electron economy. The electron economy is essentially the movement, whether we like it or not, of vast chunks of our economy away from analog systems and combustive systems and towards systems that simply plug in or digitalize or move bits on a screen versus moving switches on a dashboard. One of the most deeply underdeveloped areas for that is the electrical grid. You all heard National Grid this morning say that their assets were 100 years old. So imagine 100-year-old assets, even thinking forward about powering your iPhone, for example, or powering a car that moves. So there is a pretty wide and material moat between the physical world that exists today that delivers electrons and the world that is developing. Our electrical grid essentially has not been innovated on since Thomas Edison died. That is a true fact. And that means that as we have developed and put more and more strain on the grid, with the last few years in the invention of megaload data centers, hyperscale data centers, creating major problems. And the grid is naturally adapting to that by becoming more and more distributed. We're beginning for the first time in history to move away from the hub and spoke model, innovated by Thomas Edison, to the distributed model. The problem, of course, as we're seeing with Spain and other places, is that the distributed model is not ready for the amount of pressure being put on it. And Montauk Climate is going to be creating, and has created over the last year and a half of our existence, the businesses that help bridge that divide. And there's an enormous amount of value to be created for the climate. Each of our businesses have a sustainability-focused goal. Mike Gula in the crowd here just entertained all of you with an hour and a half about insurance. He is the CEO of one of our portfolio studio companies, so go see him afterwards. Since you stayed awake for that panel, congratulations. And he has a very specific metrics-based goal, which is to create financial resilience for businesses that would otherwise either go out of business or be severely impacted by climate events, and be unit economic positive. And that unit economic positivity is not something that we've seen a lot in climate investing to date, because a lot of folks have been working on infrastructure, and there's a place for that. We all stand on the shoulders of those giants who build out the infrastructure that we're working on now, but there's an enormous opportunity for us to create the digital bridge that gets us to the next leg of innovation and invention.
Got it. Okay. So you kind of looked and said, grid needs innovation, especially digital innovation. Maybe we can help by creating ventures to solve that. Okay. Just contrasting with these two different approaches for the different markets. I love it. So please, Bar.
My name is Pereg, and I'm very happy and proud to be here. I feel like I'm a MIT Sloan product. I was in this con from the other side. I'm very proud to be here. A little bit context. So I'm originally from Israel, and I moved here 10 years ago to go to Sloan. And my professional experience have been really had like a lot of sharp contrast. So, for example, I've stood up a refugee camp for families running from the Darfur genocide. And in a not that far away time frame, I've built the first inside sales team selling software as a service, the first team in Israel to actually sell software over the phone. So very different experience. And recently, or until like my last job before Polylabs, is I helped advocate for Yell that we have to do it, and build the ESG practice at Deloitte at New York. So kind of like had this like really mixed experiences, which led me to understand there is a strike gap between how technology plays in humanity, right? Some problems are solved. I can get cool, chilled cocktail to my Brooklyn apartment in 20 minutes, no problem at all. But if I want to send a humanitarian emergency package for a family, it won't take even 20 days. I can't do this and actually know it got there. Similarly, I can hire a designer in Taiwan to get me a logo tomorrow, and we'll be ready. But if I am a veteran and I have PTSD and I need my benefits, no number of clicks or waiting hours guaranteeing that I'll get it. Right? So it's like the same type of problems that require a very similar type of technology, but in some places technology is present and some is not. So Polylabs is an organization that works to repurpose technology to solve problems at scale. Right? So we're thinking about how can we take existing technology that have been developed and deployed to solve other type of problems. And we do it by doing the exploratory research. We're going deep into those messy systems, the humanitarian systems, the food systems, where it's really hard to know what technology can do. And we incubate and fund ventures that are actually able to do it in scale.
Cool, so innovating on the business models kind of thing. Okay, awesome. I'm really excited. When we were doing the pre-work, you guys had me thinking for days afterwards about what you're doing and the ecosystem around it, but we'll get to that. I do want to double click a little bit on what each of you all said. So you already said some of these words. These are messy, these are complicated, these are big systems, feels kind of hard to just focus on one thing without understanding the broader value chain. And some of these really systemic challenges, you can't really get those hockey stick returns, at least not right yet. So I guess I want to ask, where have you seen venture work, and then where was it failing, the gap that led you to the solution that you're working on today? And then maybe if you want, I always do this, I'm sorry, I weave in a few questions, but you could weave in like a success story from one of your ventures. Yeah, we can start.
Do you want to go in order? I'm sure you.
Oh, there's order. Sure, go for it.
So at Branch Venture Group, we look at the frontiers of food, and I think when you think about industries that are just starting to form or develop, that's where I think venture plays a really exciting role to be able to catalyze that change and really support businesses that are just coming to market and realizing the potential for what they're building. And that's traditionally the role of venture capital. It is to identify those very early stage, scientific developments or, businesses that are just coming to market to scale. So we think about that in the context of food. And right now, for us, we're looking at things like sustainable packaging, novel ingredients. Like I said before, supply chain technology is something that we've been looking at for a really long time. Taking both cues from the consumer space of, what do people want to eat today? How do we think about what food is comprised of, and if it's clean label, if it's better for you, if it meets a lot of these changing consumer trends, or if it happens to be a brand that's really just cutting through the noise in a category, resonating with consumers in such a way that's really catalyzing its growth. And one of my favorite examples of that is a company called RX Bar. If you went up to the bar category in any grocery store, you're faced with this wall of like, okay, I don't know what's in these things, if it's even good for me. Some of them are high protein, some of them have other things. Like, it's really hard to decipher. But what I love about RX Bar is that they basically had that consumer insight of the challenge and then put the ingredients right on the front of the package. It was a very kind of 4 or 5 ingredients, and that really resonated with consumers that were shopping that category. And that company, in the span of about 4 or 5 years, ended up selling to Kellogg's for $600 million. So remarkable growth and exit, and really capturing sort of a brand play, but nonetheless we're resonating with consumers and made a good use of that early stage capital. When you talk about more enabling technologies in food, I think that's where we're starting to see even more different types of financing of great need to those businesses. Venture can only get you so far, but when you start getting to physical infrastructure, manufacturing plants, heavy sort of capital infusions, that tends to increase your burn rate really fast because you're buying these things. It tends to reduce iteration and innovation because you're investing in this thing to do this other thing, and so you can't change that very quickly. And so those types of requirements on behalf of food businesses to really shift systems, change processes, ultimately them being for the better, are really challenging to a company's financial structure. And so bringing in other forms of capital is critical for those businesses. And at Branch, we understand the role of our company. We invest early stage, but we have and built relationships with other types of investors that we can pull in to support those businesses as they realize those capital requirements and needs, and want to grow and scale. And I think a really interesting actor in this space, particularly these days, is the government, and I'll say state government here in Massachusetts, because I think the Governor Healey's climate bill has just recently been approved as of the last couple of months, and is making funding available for new manufacturing, non-pharmaceutical-based biomanufacturing, precision nutrition, precision fermentation, alternative proteins. And I think looking to the future here in Massachusetts, that's going to be 5 to 10 years from now an enormous part of the sector and the economy.
Yeah. Okay, so venture is great when it's very clearly consumer. The consumer as the stakeholder, we can see that link. It's good at investing in that RX Bar. But all that back end, that process that really creates the sustainability in RX Bar's business around the food manufacturing, alternative proteins, whatever it might be, that's the piece that people struggle with because it's missing that connection to the consumer, and that's where Branch can come in.
I think venture is part of the equation of those types of businesses, and I think that's having a more diverse capital stack is really required of those enabling types of technologies. But venture's still important.
I was going to bring in Bar because I know you do some food work too.
I think it's just so interesting, and I love the food system. And I think the question of like when it works and when it doesn't. And I think one is exactly that, right? When the consumer is clear, there is a business model, you buy a bar. What's so interesting that is other industries, like let's take cyber, right? Cyber is not simple, right? It's not consumer. It's back-end and the coder and the app, and someone pitch it to you, you don't even know what they say, and somehow it works, right? It's a magical ecosystem where like anyone with a half an idea in the right city will get funding and will get support and will get access to the, right? So we have this example of ecosystems and I work a lot in Israel, so cyber comes clear. We're like, this happens even when it's not as clear. And then the question is like, so what's the gap? And I really think that exactly what Lauren said, like there is enabling elements of an ecosystem, the connectivity from the market to the innovation, right? So for example, we work in humanitarian context, right? Development officer that works on those front lines don't have buddies in MIT. Right? They don't have like chats with VCs. Like, so the insight to the problem is really far away from where innovation takes place. Now, I don't say that innovation doesn't happen in the front line, it totally does, but overwhelming majority of innovation capacities, the funding for innovation and the technology for innovation and the talent sits really far away from when there's back-end Montana processing sites or the humanitarian logistics breakpoint. So I think there is something to be said about the distance between the insight and what needs to be done, between what is able to produce. And as we're thinking about accelerating the pace of innovation, and we do, that's why we're all here, we really need to think about how do we close the feedback loop between this is needed, this is possible, let's put it together.
Yeah. And it sounds like that's a lot of the work that both of you do, is you're making those links so that that adaptation or resilience venture can get off the ground faster. You get it. You can help translate it for them, and maybe not as many steps that they have to take to do it. Is it different for you a little bit in electrical grids? What do you think?
So I don't do a lot of work on food, although I did have an RX bar yesterday. Still quite full, so that's a success story. Bar brings up this point about feedback loops, and it's so important. In particular, I would say Climate Tech 2.0, or beginning to enter Climate Tech 3.0 now. Climate Tech 2.0, it had a bit of a structural flaw in that they were designing and building really big public good infrastructure projects, which are some of the things that BAR does. And the public good that they generated was that at the beginning of Climate Tech 2.0, a solar panel would have cost $1 a kilowatt hour, $1. Now that very same solar panel, completely domestically manufactured in the United States, made by a company called First Solar, which nearly went bankrupt, now costs 32.5 cents, right? That a substantially similar solar panel out of China, not fully delivered, now costs 4 cents per kilowatt hour. And the same for batteries, although to a lesser degree, right? It used to be $400, right, per megawatt hour. Now we're delivering batteries in the United States for $185 per megawatt hour. However, I was previously at a hedge fund, long-short market-neutral hedge fund. However, those business models did not make themselves very conducive to the short-term, right, near-term profit-making approach. And a lot of the money we made was because it was clear that these business models were broken. They were built in era A and were operating in era B. However, what they have left behind for us, and they made for great shorts, what they left behind for us was an enormous amount of success on the infrastructure system. The fact that the levelized cost of energy, the LCOE of clean energy, is now materially lower than combustive energy is an enormous success. So Climate Tech 2.0, not enormously financially successful, but in terms of the public good it generated, enormously financially successful. Now, back to Bar's feedback loop point. That big victories feedback loop has not yet made it into, for example, consumer power bills, which inflated close to 35% over the last 5 years, right? That feedback loop has not made it into greater resilience for our electricity grid, which is getting more brittle and not less brittle. What that means is we're at an era where, just like the internet in 1992-93 was a huge money loser, right? In 1992, if I asked you to send an email, it would have taken you approximately 2 to 3 months to figure it out. Unless you're at MIT, you could do it immediately, right? Right now, if I told you to go greenify your business, it would take you 2 years to figure it out. Now, if I come and sit before you in 2 years, hopefully I'll do it again next year, but if I do it in 2 years again, that time quotient will collapse. And that time quotient collapse is actually one of the most productive and profitable portions of the venture capital cycle, right? You invest in an item that has an enormous amount of CapEx in the ground. Back then it was fiber and telephone wires, right, to get bits and bytes from A to B. Now we have the ability to make green electrons cheaply. What we need to do is create a system where you get that profitable feedback, and that pathway is going to be through digitalization, AI, software, and we will soon begin to see the efficiency gains begin to return to our system, which have disappeared over the last decade.
Okay, let me see if I can put this into a different context. So venture's really good when we say, okay, hey, this company is really good at serving this customer, which is the next customer that I can see in front of me in the value chain, and that's great. Where we're moving towards now is a world in which venture says, okay, I can see to the end goal, right? Who is our final consumer, in theory? I'm bringing in a value chain perspective for a second, but I'll come back to why. And saying, look, we're looking at these connections across the value chain. How do we create feedback loops or whatever it is, bring them back into conversation faster so that we can accelerate that move towards profitability? I think maybe part of the challenge in the adaptation and resilience world is sometimes that like final customer is a tree or the ocean. Like how do we, we're not talking to them. So maybe, and this is for you all who are working in these spaces, is there, how do you think about that? How do you factor in some of that feedback? And I'm assuming some of the feedback you have to get, it's not there, people don't know how to give it, things or the environment doesn't know how to give it. How do you build that into your venture sort of diligence process?
The impact.
Yeah, the impact, I guess, yeah.
Well, I think for us, we're very curious about the impact of our businesses in a few different ways. We think about health impact. Are these products improving consumer health? And when you think about things like the GLP-1 antagonists that people are using for losing weight, whether or not you are excited about their side effects, they do work, and they've really been able to help people reduce weight, improve cardiac function, and live healthier lives. But how are they complementing that with nutrition interventions that help support the demonstrated loss in lean muscle? How are they thinking about fiber? How are they thinking about hydration? I mean, these are impacts that these drugs have. And so for us, when we're thinking about when we see companies that are building products that are trying to support, this community, ensuring that, they're tracking their own health outcomes as it relates to their end consumer, and its effect on, their
Tying it back to value.
Exactly.
Okay.
So I think from a consumer perspective, that's how we think about it. But we have other companies in our portfolio that are doing food waste, upcycling, and ensuring that food that we consider it virgin food waste. There's nothing wrong with it. It was just created in the food processing process, and it's being discarded, but it could have value. And so one of the companies in our portfolio, it's called Shameless Pets. If any of you have dogs or cats, check them out. They're taking food that would otherwise go to waste out of the human food waste stream and selecting ingredients that have unique health benefits to dogs and cats and upcycling it. They've been able to save and avert over 2 million pounds of food from landfills into brands that are beloved by our feline and canine friends. And so we're interested in that type of impact. It's benefiting the environment, and the environment doesn't have necessarily a say. Though I would actually argue we're seeing ramifications from the environment, come to be. But in the case of Shameless Pets, they get a lot of that produce for free. So there's a real economic benefit to the brand and to the business that is captured there as well.
Yeah. Anyone else have an example of that type of value? Anyone's great.
I mean, Mike's product is interesting, right? So traditionally, insurance products are sold through a broker. You pay them a fee. It's kind of a pain. But parametric products that protect you from power outages are actually really interesting because they can be sold through the value chain of clean tech batteries and the value chain of clean backup generators or more efficient refrigerators. Why? It's because if you're putting a generator on your house, you're thinking about it in terms of backup period or a backup window, right? Like, it'll take me 10 years to pay off this battery, the power might go out once, right? If, however, you pair it with a financial solution that pays you when your power goes out, regardless of whether you have a backup generator or not, then if the power goes out, then immediately that generator pays for itself because the parametric insurance will pay for it. And it incentivizes the marketplace to engage in these power-saving and sustainable frameworks that are both profitable to the consumer. You can now use this battery,
all together.
right, to save power during peak hours of the day and night. And it'll pay itself back if the power ever goes out. So
you're able to put some solutions together to make the value story make sense.
Totally.
Cool.
Well, it's very dangerous to ask me a question about impact. So I was working as an impact strategist, right? So that can be like a 45-minute discussion about theories of change versus, I'm not going to do that. Because luckily, our problem in Pull-Ups is exactly the opposite, because the type of problem we're solving are like what I would call obvious impact. For example, in many cases, 50% of humanitarian aid goes to overheads and coordination, which means that every tax dollar that we spend to feed people that just went through disaster will go to coordinate. It's pretty easy to understand why solving it or reducing it to 40% is huge impact. Right? We know there's like 800,000 agribusinesses in the US that are struggling to get finance they need to keep their farm alive. Yep. I think that's we have Jasmine over there from Replus Connect, and she's going to have a closing session, which is going to be incredible. So I encourage you. Replus Connect is one of our portfolio ventures, and they're building local resilience within communities so they can be empowered and prepared to take care of themselves. Right? So for us, I think what is the real impact that we're doing is we're taking hard problems and we make them investable. Because traditionally, these issues are not being solved by ventures. These are solved by, public goods institutions. But in these messy systems, there are backable opportunity. They are, not all of them, a lot of problems cannot be solved by technology and venture, but some of them can. So kind of like our impact is to go into those messy systems, have all these like uncomfortable, okay, this is policy, never gonna change this. Okay, this is behavior, we need a generation. Connecting communities so they know what they need, that's a tech problem, right? Now let's build and rally around these ventures so they can then become something that traditional venture can look at, right? So in a way, our impact is that we find these problems and we make them appropriate for scale through the private sector, traditional mechanisms.
Yeah, it sounds like, for many of you, what you end up doing is saying, okay, in order for this system to work in a more sustainable way, there's already all these things that are going on. They're missing this one point. If we plug in here, we can sort of put it all together and create value. So I actually want to shift gears slightly and, okay, so you're all venture funds or angel funds yourselves, which means you also have to raise money. We're not just talking about giving out money to cool solutions and startups. Maybe not, you don't have to pitch us, but I'm more interested in what is it that your LPs are looking for? Who is taking big bets on you and your innovative ways to bring venture to market? Yeah, maybe you want to start. Well, we'll start. You want to start?
You go.
No, go.
Okay. So again, at Branch, we look at food and ag, and the food and ag industry is a $10 trillion industry. It's globally. It's actually bigger than automotive. It's bigger than telecom. It's bigger than tech, technically. And people don't realize that. And so we actually spend a lot of our time educating. If we're not talking to people in the industry, a lot of corporations that are thinking about, the future of food, people in the financial industry, don't always put that together, that these are massive systems. And within this system, so much change is happening because food in some areas has been so slow to adopt new technology. And so the opportunities, the markets are enormous. And with a lot of the innovative thinking and technology that's now becoming available and being applied to food, the opportunities are, in some cases, endless. So really helping the sort of financial services, asset management industry become aware of that, I think is something that we spend a lot of time doing to attract more dollars into this space. And then, when it comes to corporations in food that feed the world, it's not lost on them that consumers want better food, more transparent food. Climate change is affecting, how they source their ingredients, if they have and are able to produce, the food needed to satisfy their end products that they're manufacturing. I once read a statistic that if McDonald's wanted to add one strawberry to their yogurt parfaits, they'd have to start planning 3 years in advance in order to add that. So you think about these massive systems and the planning that goes into them, and how much food businesses are really taking the whole climate issue to heart and getting really concerned about it. And then I think lastly, sort of the whole economy aspect of it. As I said, states are getting really involved in the conversation around food because they realize so many of the people that live in their state work in the food industry. And if food starts to shift in such a way where those people's jobs are, in jeopardy, then that's going to be a really big problem for them. And so we spend a lot of time, in food with corporations as well as with governments that are very much thinking about the impacts of things that they cannot control, but are looking for ways to mitigate that risk, and investing with us is a good way to do that.
Yeah, wow, so very diverse set of potential LPs, I guess, for you. And then has there been a shift in expectations from those folks lately, or what do you think?
I don't know if in terms of like what these emerging companies can help support them with, or
or what they're, exactly, what they're looking for in the emerging companies, and what they're looking for you to I guess, provide for them the role that they want you to play in the ecosystem.
I would say, well, on the finance side, it's expected returns. Can these companies really meet the return profile that we're looking for as if we're investing in an early stage fund or investing, with early stage investors? And we've proven that at Branch Venture Group. We now have 23 portfolio companies that have, performed very strongly. 2 of them are valued at over $1 billion, we could share other stats. But anyway, we have demonstrated that food and agriculture is an area where venture level returns can be realized. I think on the corporate side, corporate companies over the past 5 years, I think, have become a little bit more aware of their role in this ecosystem of startups, and they have a lot of resources, they have a lot of reach, they have a lot of knowledge, and working jointly with companies to help support their understanding of where the solutions are needed, what would they consider truly value add. I think corporations have come a long way in terms of how they're dealing with these companies. So their maybe expectations have changed, but I think the work that they do to really support these companies to provide the solutions that they need has been something that has changed a lot, and I think is better.
Yeah, so maybe what they want from you is the same, but now they're seeing themselves in a different way.
Yeah.
How about, Sharo, how about you? Who do you raise money from?
I guess I'll start with a Ben Franklin quote, since we're in Boston and we have to talk about a founding father when you're here. One of Ben Franklin's most famous quotes was, "There are 2 things you can't avoid in life: death and taxes." That quote was made actually prior to the fact that he invented electricity. So if he had updated that quote a little bit during his lifetime, the things that he would say you can't avoid are death, taxes, and your power bill. And electricity is one of those things that was an extremely boring, not quite as boring as insurance, but an extremely boring sector to build in and think about for a very long time, in large part because electricity use was growing at less than half the rate of GDP. Why was that? Because of a lot of the innovations that folks at MIT here made. You made more out of an electron because of the physical innovations that were generated by really smart people and really smart engineers. And so throughout the 90s and the early part of the 2000s, you saw electricity do this and then flatten out for literally 20 years, which was an incredible accomplishment. After that 20-year period, which covers the last 7 years, we've seen electricity grow at roughly twice the rate of GDP. That creates an incredible opportunity because it's not like the electricity sector or electricity use is some small market like emails back in 1992 where 100% growth is going from 1 to 2, right? If you're growing a $3 trillion a year market at roughly twice the rate of GDP, that creates an enormous opportunity for financial alpha. And that really, as much as our investors like to say they care about impact or whatever, what they really care about is financial alpha that matches their liabilities. And so the folks who stand behind the three of us, and almost every fund that speaks to you are very large LPs who invest pension dollars back when pensions were a thing, or endowment dollars like MIT, please invest in us. They have a very specific mandate for each of their dollars, right? They have liabilities, they need to match them. And for a long time, climate tech disappointed those liabilities because people were investing in climate tech funds with 10-year windows, and those climate tech funds were then going on and investing in projects that were not going to pay back or generate the returns that Lauren's fund is generating until it was a 25-year period. And so there was a asset and a liability mismatch. Now that we're lucky to be in the time and the place that we are with the demand that we're seeing, the assets and the liabilities are just beginning to come into that matching phase. And so now we truly believe that the next leg of climate tech innovation is going to be relatively CapEx light, relatively asset light, and create the orchestration for the new electrical grid. Remember, we're going from a hub and spoke system invented by Thomas Edison to a distributed system invented roughly 15 years ago, and have that actually deliver electrons into a time and a place and in corporations' supply chains where it's clean. If you think about it, one of our customers is an entity called Digital Realty. They're the nation's second largest public data center REIT. Their power bills went up from $4 million per facility to like $45 million per facility. It's very obvious in their public records that their profit margins shrank from 60-something% profit margins to 40-something% profit margins, in large part because they had to pay a company called NVIDIA, but they also had to pay their power bills. And the ability for us now to step into the role and say, look, we can be unit economic positive on day one. We can deliver an actual climate resilience return as well as a financial return to you is what we pitch every day and what we truly believe is going to be the next leg of the 10 years of investing in the space.
Okay.
I'm sold.
Yeah.
And also, I don't think insurance is. I don't think insurance is
it's great.
boring.
Yeah.
I love insurance.
Okay, yeah, so what I hear from Lauren then is, okay, LPs aren't asking for necessarily anything different, but they're getting more involved. What I'm hearing from you is saying LPs are not asking for anything different, and now they're sort of starting to see a match of expectations with reality, which is great, which means more opportunity. How are you seeing things, Bar?
So for the type of problems that we're looking at, we're actually talking about two types of funders, right? Because if we think who traditionally funds humanitarian efforts, right? It's not LPs. It's other people that are using to buy social impact outcomes. I'm going to give you $10 and you're going to feed a child, or I'm going to have a farmer empowerment program and you're going to empower, right? Yeah. And basically, entrepreneurs that want to go to this space and do amazing things and scale, they're too for-profit for the funders that are traditional philanthropies, but they are not able or ready to compete with traditional ventures, either because they're not yet as investable or because the venture capitalist LPs are not able to understand that this is an opportunity, right? I can talk all day about humanitarian ecosystems and the billions of dollars, but it's not something that resonates and easy, right? So we're talking here about like two capital systems that are very strong in their mind that needs to change. So we are a blended organization. We have part non-for-profit and part venture investment arm. And basically our pitch for our incredible donors is like, listen, instead of like continue to fund these problems, let's just fund the solution that will end the need for endless amount of dollars, right? So the people that are investing in us on the philanthropic side, they're what we call catalytic donors that are excited by the idea that we're going to build the solution and then someone else will scale them, and that is the private sector. The other type of people that are excited about this are tech enthusiastic, people that made their money in tech, and they might not be as clear and sophisticated about the impact intentionality, but they're just very frustrated. That like, why is tech not here, right? We've solved bigger problems. Why when I try to donate somewhere to claim a benefit for my child, I'm back in the 70s, right? So they are like, someone can please fix it. Now the other side is our investors, and for them it's really compelling because we bring an investor only after a venture went through a process of exploratory, identifying an opportunity, incubating, and de-risking it. So when something is ready for investment, it's an incredibly overlooked market, which has provided huge diversification, and it has been de-risked because plenty of cycles through the non-for-profit side have kind of like cleared that this is a good idea. And the alignment here, where like our donors are excited when things are fundable because that means they'll scale, and our investors are excited when things are donated because that is their de-risking mechanism. So that's how we blend the two pieces of the pie.
Okay, so I guess still traditional venture investors, LPs, nothing's changed about what they're asking for, but you're finding ways to blend the world of philanthropy and donors into that model for impact.
And one thing I'll say, I feel like
alignment.
blended finance is a term, and catalytic capital, and below market, and concessionary, and all these wonderful terms about capital. And I believe in all of them. And I've structured those really complicated financial tools. But for people here that thinking about going to these spaces, I just feel like, especially now, the strictness of the expectation is likely not going to change, and we're going to have very few people that are willing to be like, well, I'll be below market, but still. Yep. And I feel like understanding what do we slice the capital versus blend the capital, what is appropriate for philanthropy or grants, et cetera, and what is appropriate for LP. I think this rigor of like, let's just be honest, what is venture backable and what's not yet. I think that's mission critical as we restore the trust. And I really agree with what Sharo said. There has been a promise. It not necessarily have been fulfilled from return standpoint, and it's on us, the impact evangelists, to be extra rigor and extra careful as we promise things as for return or impact.
Mm-hmm. Yeah, I see a lot of nodding. I've maybe, though, thinking about time, one more question for you all, and then I want to save a couple of minutes for the audience. It sort of, I think, was a good segue there, Bar, what you were saying. Sort of a bit of a call to action in my mind. I know we have a lot of students in the room. We've talked a lot about the complexity of systems change. We're shifting, systems themselves. We're shifting LP mindsets. We're shifting donor and philanthropic mindsets as well. Your financiers need to de-risk, you need to de-risk, all of this type of stuff. But what that really means we need is a lot of stakeholders to be involved in these ecosystems that we're trying to shift. It means that your startups are going to need others, right, to be successful. You will need others to be successful. So a lot of the folks in this room, I don't know, maybe they're not all gonna start a startup, but they can definitely play a role as future leaders in making a change. Who are the stakeholders that you think your startups are going to need to be successful? What do you want those future leaders to know as they go and step out into all sorts of different corners of the world?
Well, it depends who you are, right? If you are, if you're a VC, right, and I think we have a couple of those, it really is about where do you source your deal flow, right? Who are you trusting to give you good deal flow, and maybe consider to open up to like what other deal flows, right? So YC is a great deal flow source, that's right, but what other places where you can get opportunities? And then when we meet with new founders and they're not necessarily resonating with the first step, take a second to ask, are they not resonating with me because they look and talk a little bit different, or is it really different? If you're a philanthropist or a donor, and you really see yourself as a strategic donor, and you really want to measure impact in multipliers, really ask yourself, who am I de-risking that can be scaled without me? How do I release the dependency on philanthropy through funding the things that will not longer need my funding? And if you're a student, I think it's really tempting to be like, thinking like, I want to do impact, or I want to work in climate, and I just want to be really successful in doing good in the world. And I've been to Sloan, I know it's really overwhelming, and you're just curious. Finding the system that you like, finding something that really interesting you so you can go deep into the messy systems and develop a unique insight about something can be solved, that is what the world's going to need, right? Because we're going to have AI to scrape the obvious. We're going to need people that are truly curious about specific types of problems and get expert. And that's what we're looking for when we're hiring, and I think that's what the world needs of you right now.
Mm-hmm. Okay.
I will make a call to action to our LP base, our investors, as well as the students in the room. And so for the LP base, I would say, do not give up on the fact that climate is an alpha generating device. You can make a lot and will make a lot of money on climate. Just as you all did in the beginning part of the cycle, you will do it now. This is the bottom for sure, and there will be the checkmark returns in climate in this generation and not 30 years from now. My call to action for the students is to understand that nobody knows what they are doing in the world. Understand that it is your job to step out and say, wait, I have a stupid question, but don't say that out loud, that's discrediting. I have a question about what you just said, or can you help me think through this system cleanly? Because so much of the world gets caught up in jargon, so much of the world gets cabined into the little cabinets that other people know to open, right? Think through the problem clearly, quit your day job if you want to go into some climate adjacent space or into a new startup space. And if you have an idea about A, not wanting to work for a boss, and B, the fact that a system might be misunderstood, jump on it. Because you will solve a problem that's bigger than you anticipate.
I guess it's sort of a tangent to your question, but I think don't underestimate the value of relationships. I mean, in investing in relationships and speaking with people. And, I think people invest in people that they like and people that they trust. And how do you develop that rapport? And how do you reinforce that rapport? And being vulnerable, not having to know the answer to every single thing. I mean, we love at Branch, as I'm sure you guys do as well, when entrepreneurs come to you and they're like, I faced this problem, I need thought partnership in how to solve it. And it's interesting because you may think that kind of opens you up to not having all the answers. Well, you have to have all the answers. I'm the one that gave you the money, like you better have all the answers. But at the same time, when you bring in an investment and you're working with people to solve these really massive problems that are in dire need of help, you don't do that individually, you do that with people and you do that with community. And so really understanding how to work with people and how to bring those people into the fold to collaborate, I can't overstate the importance of that enough in this space.
Thank you. All right, so I'm hearing we need to find the right people who can align impact with financial goals. We need to be thoughtful about placing bets that really link the value chain to create sustainable value. That's how we're sort of innovating on venture here, and networks and thought partners. So making sure that we're all being thoughtful about the role that we can play and being part of this network and building that trust that will lead to a new future for venture, right, in the adaptation and resiliency space. Thank you. All right, we have time maybe for one or two questions. Anyone in the audience have anything you want to ask?
Who knows how to access the questions in Whova?
Oh, there's Whova questions?
Do we have Whova questions?
I don't know how to use Whova. No. I don't know. I'll take it. Yeah, I have one over here.
Thank you. I had a question for Lauren. When it comes to some of the issues that you're seeing with the food system specifically, what do you feel like are areas with low-hanging fruit and opportunity for improvement? Because I've been getting more involved with the food system from a technology standpoint and everything, and also trying to balance the information coming from the UN about waste and emissions and things like that. And I just feel like you said, ripe for potential, also really old practices and stuff. And
Yeah. Well, what I love about what you just asked is that there was a food pun in it, and food puns are rampant when it comes to talking about startups in this space. But no, I think, in terms of low-hanging fruit, there's so much, and there's always opportunity in food, which is the most exciting part, because we're not going to stop eating. And in fact, there's going to be more mouths to feed around the world in the years to come. And people care, now more than ever about what they're putting in their bodies. And the implications for that, are felt across the whole food supply chain, right? Like, we're approaching a period of time where, we know a lot about the nutritional, aspects of packaged goods that are found in the middle of the grocery store, certainly some that are found on the edges. But, we go to the produce space or we go to the meat space, we actually don't really know much about the nutrition that's present in those products. We don't know where, how good the soil was that those things were grown in. We don't know how well those animals were fed, depending on where they were raised. So I think we're getting to a point where people are curious, people want to know, and food as medicine is a big area of opportunity where I think we're going to see a lot of new startup development to answer all of those questions that not only consumers want, but I know corporations and other intermediaries want to report on. So that's one of many areas that we're thinking a lot about. And I think that there's a lot of expertise in this local ecosystem that can.
Can I add one?
Quickly. We're running up in time.
Really boring mid-market processing facilities, right? There's a lot of cool stuff happening at the supermarket level, at the farm level, but there is millers that needs to mill. There is someone that is pilling the potato so you can buy it in Whole Foods as you know it. And this middle market is really, really critically important if we want to transition to sustainable. Another one is about farm management, and there's like a bunch of startup in farm management, but if you think about it, farmers are like this business that has very low margin, and it needs a CFO and a CMO and a COO, and they don't have the margin to set, so really thinking about how do we powering those businesses so they are as effective, so they're able to compete in a very, very difficult, these are kind of like two specific low-hanging fruit that we're thinking about, and as Lauren said, there's so much.
Okay. Oh, I wish we had time. Oh, I don't know. Do we have it? I'm out. Okay, I'm out of time. Sorry. But please find them afterwards, and thank you all, and please join me in thanking this panel. Thank you. Oh yeah, we need to take a selfie, right?
Oh, right.
Okay, wait, stay there, keep clapping.
wait.
We're gonna take a selfie.
We got
for
orders.
for her LinkedIn, which is basically a professional Instagram.
No, the other side. No, the other way with the
group
with the
in the
audience.
back.
Oh, with the audience in it.
Yeah, that was like why it's cooler.
Far's not even in it.
Excellent.
Thank you,
Now we're good.
everyone. Thanks.
Yeah, let's give another round of applause to our engaging panel. Thank you guys so much. Okay, so now we are going to take our final short coffee break. We have a 10-minute coffee break until 4:30. At 4:30, we'll then start our startup pitch competition. So meet us back here in about 10 minutes. Thank you so much.